Good everyone, Les here, Chief Analyst of BG Trading Australia. Hope you are well. Today is 30th July 2024 and I'm going to be analyzing Appen Limited that just released its second quarter from FY24 financial year. Remembering that Appen does record its financial year as per the calendar year, not as Australian financial year. So just that's why it's the second quarter, not the fourth quarter. Anyway, so the stock has rallied 50%. We want to analyze, provided that this is a stock that we have been holding it together with some of our VIP members, as we have expected that anyway. If you looked into our previous analysis, you understand why. And we're going to quickly cover this in this channel. Also, understand why the market created this hype today and whether there's more upside or we could see a crash in the next upcoming days. Let's have a look. Just want to remind you, this is not a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we avoid buying stocks at the formal area, and much more. All here together with our VIP members. So if you like the way we trade, please subscribe our channel, share this video with someone that you believe would be interested, and also jump on board our free Facebook community. I'm gonna put the details at the description below. Let's kick off with this. I have analyzed this stock as per the last quarter and the full year of calendar year 2023 for Appen, and I realized, and that was just back a few months ago, that the company was actually turning around. Not only for the full year that we saw the net loss that was huge, $200 million net loss in 2022 becomes $100 million net loss for the full year 2023, and potentially shrinked in more than a half of the net loss for the full year of 2024. Remembering that we are only in the second quarter for this full year. But we saw here some very compelling improvement, even though the company has lost Google account and the stock has crashed ever since. No, so the key here is, and I go straight into key 2, which was released today, is that if you look into the EBITDA, you can see here that was the company has been improved quite substantially in December, and then has been improving from the previous financial year. Also, revenue increasing as well without the Google compound. But now if you look at this, it's almost kind of almost reaching what the revenue was with Google. Still 16% below, but provided that the company is really showing that is improving based on new clients, acquiring new clients, revenue from China, new clients in China and other global clients, and taking advantage of the rapid AI growth, and we could see more institutional investors start giving a go for this company again, as the company shows on its underlying numbers. So what I like here is that the company is almost, like Appen is almost reaching similar levels of revenue that Appen was reaching before, when it had Google on its books. Now doesn't have anymore. Obviously, the key risk for Appen, and that what makes this particular stock not a investment grade, is that if the any other major client departures from the business, and that's when we might have another crash or something, if that happens. But if it doesn't happen, provided that now most of those clients and other companies are hungry for getting AI tools and using this technology to evolve their own businesses. So it's very likely that we see a continuation of this momentum for Appen. So My opinion is that Appen is currently a stock that we should be looking at holding. So I'm not interested in selling this particular stock right now. Now, look at this. There is, and another reason I like this, and looking from the technical aspect, is that when Appen announced that it has lost Google as a client, so the stock was trading around $1.70, $1.80. Now, the revenue is almost catching up with when the company had Google on its as a client, and the stock is still trading at 69 cents. Wow, it's moving really quickly. Very impressive, which is good. So we should keep holding. So essentially, the thing with this particular stock is that extremely undervalued, provided the EBITDA and the net loss after tax for the upcoming financial year. And again, we're still only on the second quarter. It could be considerably low, and the EBITDA could be considerably better than before when Appen had Google. So, using it as a comparative, I would say this could be a very positive turnaround for the business. Okay. Now, whether there will be further traction by investors, I don't know. We still need to see a few more quarters to get this confidence back. But the bottom line is that the short-term confidence is here. The stock hasn't crashed after this huge open. Is in fact has sustained its rally, and if we keep momentum and investors realize the company is in better position financially, fundamentally, when it had Google as a client, so it's more than likely that we see Appen trading above $1 in the near term. Okay, but obviously, would I keep the stock above $1? I don't know, depending on my personal financial circumstances. But I think, provided there is this strong resistance here, we might see a short-term sell activity around $1, and we could, if the stock reaches the next resistance level around 78 cents, well, 80, between 78 to 82 cents, we also could see a considerable selling activity here, which is exactly where the SMA, the long-term moving average, is sitting. So it could be tricky here, but the overall fundamental aspect of Appen is improving, and the outlook is positive, as long as, and the risk lies on the company ability to get more accounts and not losing the current accounts. So good luck with Appen, and congratulations for those who are holding Appen, buying early around 50 cents level, making some good money now. Thank you very much. I'll see you next video. Bye.